Hello, this is Bob Joyner, and this is the part three of a three-part series I'm doing on the day trader's mindset. And this one is called Detachment. And so those who are following along, so this is the third part. We've been talking about flow in the part one. We talked about acceptance in part two, and now we're talking about detachment. Detachment is not a word that you hear used a lot in a positive way in terms of how we are here in the West. It's more of a Buddhist concept, um, and the idea is to be a little bit removed from the consequences. So I'm going to go ahead and dig into that and try to explain it a little bit better than that to you. So detachment is a problem occurs when we become emotionally attached to the outcome of any one trade. I know this never happened to you, but where you're in a trade, it moves against you. You're not in the flow. You're not accepting the new reality, and you become very attached to the outcome of the trade. It's got to be a winning trade. If this trade loses, I'm blah blah blah, right? And you become so emotionally attached and otherwise attached to the outcome of the trade that you can no longer see clearly, and you're no longer trading in the flow. If we can only accept one outcome, namely that this trade must be a profitable trade, then we are not accepting the current market for what it is. We are not listening to the market, and we are not flowing with the market, all things I've been talking about in the previous videos. So detachment is an important thing to consider. We have stepped away from an unbiased appraisal, and we have staked our livelihood on a rigid requirement that all of my trades must be profitable. Now, if you've been trading for a while, you don't have to trade very long to find out that all your trades are not going to be profitable. Therefore, what are you going to do with the losing trades? What are you going to do with the outcome of any one trade that you're in? How attached are you to that outcome? The problem occurs as soon as we place too much value on the outcome of any single trade. So we place too much value in a lot of different ways. It could be our equity position, where we put too much equity on the trade, not analyzing and accepting the risk on the trade, and we're like gambling or whatever. We can place too much value on the outcome being a certain way, on perfectionism, that I've got to be perfect, I've got to be right every time. We can place too much value on being right in order to protect our ego and our image. Too much value on an external or artificial goal, such as hitting a certain number of winning trades in a row or hitting a certain percentage, to where it takes us out of the framework necessary for a day trader's mindset. We can place too much value on our recent string of wins or losses that creates stress for us in the present moment, too much value on our opinion or our bias, and too much value on our technical analysis that, well, I figured out this chart this weekend that's almost perfect, but now things aren't going that way. The result is that we become so attached to the outcome that we strangle ourselves. We become unable to flow with the market's new information. We have blocked ourselves from flowing and from being in sync with the market because of our overly attached, our overvalued proposition there. We become attached to a specific outcome that our original intent of trading for profit morphs into this ego-related goal of trading to prove that we're right. Our lack of detachment causes us to be blind to new information, to step out of the flow of the market, and to only accept an outcome that makes us look good. We avoid the new market reality because we want to avoid the pain that comes with being wrong. And of course, the outcome of that is not good. By its very nature, we are overly attached to the outcome of this trade going a certain way. Then you have a limited, your options to one, right? You've limited your options, and that is, this trade has to work out for me. Since that is the only option that you are attached to, and you're attached to that outcome, then you will ride that trade all the way to zero. The failure to detach from your required outcome means that you have valued the outcome of this trade above all of your other values. You're disregarding your objective rules for trading, for limiting your losses, for protecting your equity, etc. This lack of detachment holds the greatest potential for your own self-sabotage, because you're clinging on to something, you've got to have it, and you can't just let it go. Another quote from Mark Douglas here. Although few would admit it, the truth is that the typical trader wants to be right on every single trade. He is desperately trying to create certainty where it just doesn't exist. The irony is that if he completely accepted the fact that certainty doesn't exist, then he would create the certainty he craves. He would be absolutely certain that certainty doesn't exist. When you achieve complete acceptance of the uncertainty of each edge and the uniqueness of each moment, your frustration with trading will end. And that last sentence there kind of really summarizes what I've been talking about in this three-part series. We've been talking about trading in the zone, which is trading in the flow. We've been talking about accepting the market and accepting this trade for what it is. And then here, just becoming detached from the outcome, realizing that this single trade is really not that important. How many trades are you going to have this year? Are you going to let one trade screw up a whole bunch of trades because you're so attached to the outcome? So how do you become less attached to the outcome? One is in the yellow there, take inventory of your emotions. We've talked about in the last video, we talked about acceptance, right? We talked about flow in the first video, and in the flow we talked about that chart where you can look at your emotional upheaval that's going on, and if you're in the quadrant of being worried and stressed and you have a lot of anxiety, then you're obviously not in the quadrant of being flow and relaxed with the market and detached from the outcome. You can think in terms of value. Name the value. Why is this trade so important to you? Why is this one trade and you're holding on to it? Why is that so important to you, rather than cutting your loss and moving on to the next trade? And then focus on the present state. What is, at this moment, fill in the blank. So symptoms of attachment, if you will, are like if-then statements or clues to your attachment. If this happens, then I'll be, and you get stressed out thinking about the future because you've attached so much value to this particular trade. Other symptoms of attachment. If this trade doesn't work out, then I'm a loser. If this trade doesn't make money, then I won't be able to fill in the blank. If this trade doesn't work out, then I'll lose too much money. So you hold on until you lose even more money rather than accepting the new reality. The upshot is that we feel stuck with our decision. And whenever a trader tells me that they're stuck in such and such trade, no, you're not. You're not stuck in the trade. What they're really saying is, I'm so attached to the outcome of this trade that I relinquish control to the market gods, whom I will blame if it doesn't work out. You're never stuck in the trade. Take that language out of your vocabulary, because you do have control. If you are stuck, then you are so attached to the outcome being a winning trade, you're not accepting the reality of the charts and the market that's in front of you. Attachment is allowing our ego to manipulate us into acting out behaviors that supposedly protect us by encouraging us not to take any action that might make us look bad. So what am I talking about there? We have these systems of beliefs that operate subconsciously, unconsciously, right, and that make us think, feel, act a certain way until we identify those things and we detach from those things. So attachment is where you're allowing your ego to determine your fate. You're identifying so much with your need to be right, and you're valuing your need to be right so much that you cannot remove yourself, right? So part of the job of our ego is to make us look good. So if we lose money on a trade, then we don't feel so good. We don't look good. Our ego helps us stay looking good by refusing to acknowledge any information that disagrees with that notion. Well, I can't accept the fact that I'm wrong on the trade, because then I'll look bad. Then I'll lose money. Then I'll fill in the blank. So even if we're holding a losing trade, the ego doesn't mind so much because we're not officially a loser yet. We haven't exited the trade. We haven't lost yet. We're not a loser until we exit the trade with a loss. So if we don't exit the trade, then we're not a loser yet. So that's the sort of attachment that our ego likes us to make in order to make us feel good about ourselves as traders, and it's obvious that we're too attached to the outcome there. So instead of thinking one way, you can think of another. So instead of thinking, I am stuck in the trade, think, I have complete freedom to exit this trade with a smaller loss. Instead of thinking, this trade has to, think, this trade could this or could do that, and I'm prepared to take action to protect my equity. Instead of thinking I have 100% certainty that I'm right about this trade, you don't have to think that way. Instead, think, I acknowledge that this trade could go either way, and I'm okay with that fact because I know what to do to protect my equity. So it's a different way of thinking. It's a detached way of thinking, and being detached from the outcome of that trade helps you accept the market reality, helps you accept your responsibility to take action when things move against you, and it keeps you in the flow of the market and of your own mental state. The reality is this: when we fail to detach ourselves from the outcome of any one trade, we create the very suffering that we seek to avoid. For example, we fear losing money on the trade, so we hold on to it despite all the objective evidence telling us that the trade has changed and our initial assessment was invalid, or that things just changed. Our attachment to a specific outcome ends up costing us more money than we had if we simply acknowledged the new reality and exited the trade at that point. Question: when is the best time to exit a losing trade? The answer is as soon as you realize it's a losing trade. So in this video series, we've gone over 3 aspects of the day trader's mindset, and I hope by focusing on each one that you've been able to see yourself in different situations and see things that are maybe blocking you from success as a trader. As I mentioned in the previous videos, I've recently started this new Facebook group. It's a private group, but there's a link, an invitation link beneath this video in the description box if you're interested in day trading the SPY or swing trading the SPY. We're talking about options here, puts and calls. Then you can request to be part of that group. And also here's some other videos that you might be interested in watching, and appreciate you watching today. Hope you subscribe to the channel and got more videos coming out for you. All right, thanks.